Hello everyone, this is Stock Market Daily. Thank you for joining me today. It is May 9th, 2023. As always, this is not financial advice. Please don't copy my trading strategies because this is only for educational purposes. All right, so looking at the SPX chart, the S&P 500, you can clearly see that we had a down day today. We gapped down lower, and the market did try to recover, look like in the first couple of 30 minutes of trading, but this prior resistance level, that was the news on the Fed Senior Loan Officer Survey, kind of acted as pretty much resistance for the good part of the day to where we ended up breaking down, kind of consolidating here and trying to break out again to pretty much just end up right kind of where we opened. Maybe it was slightly lower where we opened with a bit of a pullback towards the close there. It's possible that we had this pullback as traders saw that we didn't kind of stabilize our price here. We didn't trend up higher, and we do have CPI data, which I completely forgot about on Monday. I thought this week was kind of free and clear of any type of important data, but I completely forgot about CPI. And once I remembered that, and once I saw that it's going to be CPI data tomorrow before market, I was a little bit more cautious and made sure I closed out my trades. So let's go ahead and look at the trades right now. And I did take a screenshot, but I took it a little bit late. So let me pop that up right there for you right here. So I did have, this is what it looked like prior to me closing out the trades. So I did have, pretty much I deployed all my calls and my puts today. And again, this was in the morning. Probably wouldn't have done that had I remembered that the CPI was tomorrow. So let's take a look at the puts first. So I opened up two at the 41.05 level, which is right here. Okay. And I collected $460 premium on each of those options. The next one I opened was 40.95, which is right here. And one of those, and I collected $275 premium on that. And lastly, I opened up a 40.85 just because this is my last one. I saw that, I could collect at least $100 on it. Decided, if we do pull back, probably won't reach 40.85. And if we did, I think that would be like a full percentage or so that we would be down. And I felt pretty comfortable with that, deploying my last one at that point. And looked like at that point, actually, it did look like the market was trying to stabilize and even move up slightly. So collected 125 on that last put. Now, for the calls, I actually opened up one today. And again, I wouldn't have opened it up because I already had two that were in play and rolled from Monday. And even though we gapped down in the morning, could have very well went, against me. Could have once we kind of broke out from that resistance level, it could have trended up higher. Could have tried to close the gap from yesterday. So these two were already from yesterday, and these two were from yesterday as well. Now, the one I opened up, I took the screenshot after the fact that I've already closed it, because just so happened that we did take a dip during that time. And I decided to, once I already knew about the CPI, at that point, it was a little bit later in the day, I said, okay, I'm going to go ahead and close it out. So for this one right here, I collected $295, and that was at the 4,135 strike price. Okay, collected $295 on that option, and I closed the back for $40. So at the end of the day, with about 30 or 40 minutes left in the market, I actually ended up having to go somewhere, brought my laptop with me just in case, and ended up reaching my destination and parked, pulled out my laptop and decided to close the 41.30 level right here. And each of those, I didn't have to. It didn't seem like we were going to hit it. However, just because I was traveling and I didn't want to risk it, I closed that one down for uh, $10 per contract. So not that big of a deal. And on the same thing on the put side, the 4105, I ended up closing it just in case, and that one was $5. So again, just because I was traveling, I wanted to make sure that I'm not in any sort of last minute either huge run up or pop, huge run up or big drop. So that's what it looked like. Now it looks like this, obviously. And the great news is that everything is out of the money. I'm not holding anything overnight at this point. So tomorrow, if we have either good data or bad data, and if we go way up or we go way down, or we probably may not even move, but it is a big event that usually tends to move the markets, and I'm just happy I'm not going to be holding anything during that time. Okay, so that's that for today and tomorrow. Let's check in on that credit spread that I had. I'm still waiting for this to. Let me expand this a little bit. That should be enough. I'm still waiting for this to be below $100 or just around $100. I don't want to leave, about $120 or $130 on the table. It doesn't seem like we're going to go up to 4,300, but at the same time, the theta on this is 29 today. So it's going to take a while for this option to decay to the full $100. It's going to take another week or so. And I'm starting to think that it might be better especially if we don't have a significant move down. This is going to take a while. And I'm thinking that if possibly by tomorrow, if nothing happens, I mean, obviously if it goes up, I'm just gonna leave it as is. The theta is gonna increase, and I'm gonna let it naturally decay. But if we do go down tomorrow, I believe I should close this option even if it's above 100 or maybe 180 or so, just because this is going to take a while to really decay. And really what I'm kind of what I'm losing is opportunity cost, because I could take this same position, and well, it wouldn't be the same position, to be honest, because this is 4,300, but I can take this position and trade it in for a very similar position, just a little bit farther away in time. So we could look at June, for example, 10th or 11th, or maybe even the 9th, and see what we have for at least $1,000 worth of premium. And it looks like, even though the market's closed, it does look like we're looking at a 4280 level here. However, it is $20 lower in strike price, which makes perfect sense, because where the SPX is right now is lower than where I traded this, and I actually collected way more premium. I believe I collected $1,200 or $1,300 premium when I sold this option, but the SPX was about 40 points higher. So, but if we look at this 280 level, you can see that the theta is 62, right? So $62 per day it's going to decay versus the 29. And obviously the better part of it would be to collect as much as we can. So that's my train. That's how I'm thinking. That's how I'm thinking I'm going to take this trade. We'll see what happens tomorrow. If nothing really changes tomorrow and we still have a little bit more premium, I'm going to check the news and events for the next couple of weeks. Make sure that there's any significant events that are, well, not weeks, but at least probably a week ahead of time, and make sure there's no significant event that is happening in a week from now, and then I'll make a decision then. So, but that's that. I mean, this trade has worked out so far. It worked out great. Already collected. We could take a look how much we collected already. The P&L on it is $1,977. So, and today was 105 just for today. So it's working good. I'm gonna keep it up, and I think I'm going to do the same thing on the put side, especially if the market sells off a little bit. Pretty much do a strangle on it, one on the call side, one on the put side, and see if we could collect a little more premium. The tricky part with the put side, of course, is that it is going to take a lot more margin. So I mean, I bought this option right here, the 4600, at a much lower price. So let's see right here, the 4600 call was purchased for trade price for $27, and this one was credit the 4300 call that I sold was a credit of 1,222. So on the put side, to get something that is for $27, you would have to move way down in strike price, which is opening it up to a much higher margin requirement. So that's that. We'll see you guys tomorrow, and I hope everyone is enjoying these videos. I put them out every single day. So if you're new to the channel, please do consider subscribing, and happy trading. Bye-bye.